horizon. But our news this morning came back very good. Advanced GDP, although it did miss 1.4, core price PCE price index beat expectations. Advanced GDP price index beat expectations. Personal income came back in line, and then personal spending came back in line as well. The rest of the world had beat their flash manufacturing PMI and flash services PMI numbers. At 9:45 a.m. Eastern Standard Time, we get our flash manufacturing PMI and flash services PMI numbers. They're expected 52.4 and 53. Everything above 50 is considered an expansion. Then at 10 o'clock, we get our new home sales numbers and revised University of Michigan consumer sentiment and inflation expectations. When we're thinking about gap fill statistics here as we're going into our morning, there is a 64% probability for the gap fill as we go into our morning, 72 over the last 90 days, and then 83% of our gaps have filled over the last 30 days. But then that is the time. What about price? Inside of the 20 handle, there's a 71% probability of filling the gap. Outside of that 20 handle, there's only a 52% probability. Only a 52% probability. If you're outside of the 30 handle, it's only a 33% probability of filling the gap. If we look at where we are right now, we're right below the 20 handle, which is a coin flip, which is essentially a coin flip. And so we have to think about that from the perspective of if we're inside of the 20 handle, there being a 50% probability of filling the gap. And if we do end up falling outside of that 30 handle, there's only going to be a 32, 33% probability of filling the gap. Then we're going to have to think very closely about, then this is the scenario that we were going into our afternoon with. We were running right up into resistance. We knew where our resistance level was, and we were watching for the 20 handle to lead us into the gap fill. Well, that traded up here, and we overshot it. And now we overshot it to the downside, You'll notice that there's a previous low down here sitting right at that 30 handle. And that is the, of course, edge of the probabilities that would create, some kind of bounce here as we go into our morning. But we also have to take into account where is the VIX in relation to its previous high. And we're running right up into that level here as we're going into our morning. Yesterday, we were making the case here that both the VIX volatility longs and the indice longs were actually both valid cases here, as we're going into the end of the week. And we know that, when we're looking at this from the perspective of a risk-off event, that the VIX outperforms the indices if you have an indice sell-off and a VIX rally, the VIX rally will outperform the indice sell-off. Obviously, when we're in a series of longs, the indices are, in general, when they're in an uptrend, much easier to trade than, VIX volatility shorts sometimes. And so there's just tools for the job. Where are we right now? Well, we've essentially gone right to the top of the range from our VIX long setups and right down to the bottom of the range from our indices shorts overnight. And the question that we're asking here as we go into the end of the week is, will there be another bounce off the bottom of this range? And I think there's, we could think of dozens of reasons why, there might be a failure here. The first one is the VIX's long setups right below us. There's a VIX explosion support level that we've been bouncing off of all week. So if this is going to be the moment here, this stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.